before you start, because there's a lot of new people that have since joined the room that have never really heard you talk. So can you just give just a quick, like maybe like 1 or 2 minute overview of your background?
Okay, sure.
Thank
Well,
you.
okay, well, I am retired right now, but my career has been 30 years on Wall Street, of which 25 of those years was a CFO for a market maker on the New York Stock Exchange. Before I worked as a CFO, I got my CPA license. I got my registrations for the Series 7, 24, and 27 for certain certifications. And that's really it. So I've really spent my whole life on Wall Street. I know the industry very well. And now I basically trade from home. I'm more of an investor than a trader, but I'm also trying to learn how to be a better day trader as well.
Well, we're very grateful that you're here today. So we're going to talk about an impromptu chat about obviously the markets today were very rough, and obviously a lot of people were, their P&Ls all red, a lot of panic going on. So I'm just going to turn it over to you to take the floor and talk to us. And then once you're finished, I'm sure there'll be, we'll open up the floor to people to ask you some questions, if that's okay.
No problem.
Thank you very much.
Okay. So the reason why I did this today, because it brought back a flashback of two crashes that I experienced. I've had maybe 30 days like this today in my 25 years on Wall Street. But the two that really impacted me the most was the crash of 1987 and the crash of 2008 and 9, the liquidity crisis. Where Lehman Brothers, Bear Stearns, and everyone thought the world was going to come to an end, that there was going to be no more money to hand out and give for people to borrow money. What both of these, I just want to make sure, can you still hear me?
Yep, you're good.
Okay, because sometimes, all right. So I thought those two crashes had something in common for me. It basically rattled my nerves, and basically I almost had a nervous breakdown. But the first one was 1987. I was only on Wall Street for a few years, and I had only $50,000 in my portfolio. And on that day, I lost $35,000 of the $50,000. So I came home, and I remember at the time when I walked in the door, my parents saw me, and they thought that I just jumped into an indoor pool with my suit on. I was soaking wet, and I really thought it was that I lost it all. So today, obviously, I didn't have that same reaction at all. Far from it. As a matter of fact, I'm very calm today, and I'm very optimistic today. And I'm not worried at all, because we're talking about two different kinds of environments. Back in 87, we had a bubble. We just went through the, interest rates were getting higher. of the loss was much higher than obviously today. Today, the economy is very strong. And we have someone in the White House, and I don't want to get into politics, but the one major plus we have is we have a businessman running the country. That's a major plus. But today, I was thinking about, how people who are just starting out, and I wanted to be here to kind of calm everyone's nerves, especially people who are investors or people who are just beginning their career as an investor, putting their, just starting out. So this is really what I want. So this is what I'm going to get into now. I got a lot of phone calls today from people, from friends, family. All of them were worried, were scared. And they had the same kind of reactions that I had back in 1987 and 2008 and 9. So before I gave anybody advice, I wanted to make a few phone calls myself. And I make calls to people who I've known for almost 25 years, who I trust with my life and my money with. I wanted to hear what they said before I spoke to my friends and some family members. And basically, after I got off the call with about 4 or 5 of them, I started to get the same type of feedback. And generally, nobody was worried. Okay. The only word that I heard was on television. People were talking, scaring people, CNBC, Fox News, that this had to happen, that, this is a bubble in the making. But in the meantime, the people who don't want to go on television, the people who have refused to be interviewed many times because they don't want to have the notoriety, they don't want to get blamed in case they do make a mistake. These are the people that I call the smart money. I'm sure you've heard that term many times. Who is the smart money? Well, to me, the smart money are the people that are behind the scenes, that invest and manage hundreds of millions of dollars, who you never hear about, but are always consistently making returns, high returns of investment for their clients. So they broke the conversation down in a couple of topics. The first one was interest rates. Everyone's scared about, now interest rates are going to go higher. Okay. But the economy is in good shape. The economy can absorb higher interest rates. That's what they said. Okay. And they were talking about, there was an article somewhere posted on Seeking Alpha today about why home builders were getting slammed because of the mortgage rates going. Right now, the national rate is something like 4.22% for a mortgage. If that goes to 5%, I was told that could increase a 30-year mortgage, fixed mortgage, a variable mortgage by 12% more a monthly payment. And that would scare people into buying a house. Well, the smart money said that the rates are still too low. I remember, and they remember, when there was a boom in the real estate market in the 1980s. when interest rates for mortgages were more than 5%. They were somewhere between 5, 7, or 8%. So this is still very low. So, people are thinking now, well, home builders are going to go down the drain. Who's going to want to buy a house? It's on the contrary. I think people are going to start to see that now's the time. If they want to buy a house, now's the best time. Then there's the economy, the GDP forecast. First people were shocked when I went to this seminar back in December. And some people were shocked when they heard that the GDP rate was going to be 4%. That was their forecast. Well, now that 4% is on the low end from what I hear. Now they're talking about 5 to 7% in the next few years. Okay. Another main important topic is taxes. When they're talking, President Trump said that the average household might get $2,000 more in their refund. I did a calculation for my own son, and I took his situation and I did a quick workup study. I took the tax laws that I know, I built it into a program, and I come out that he may get $4,000. And I did it for someone else, and they may get $3,500. So I think the $2,000 number might be on the low end. You might see twice as much as that. So now think about this, for example. They said that there's 50 to 60 million people in the country that work, that are taxpayers. Take that number. Let's take 2,000 if you want, or even 4,000. Multiply that by 50 million people. Can you imagine the amount of money that is going to be in demand and to stimulate the economy? I mean, just think about that number. I even tried to multiply $4,000 times 50 million. My calculator I couldn't even understand what that number was. I don't know what that number is. Okay. So think about that extra money that is going to be used for whatever purpose, for either buying appliances for a house, or using that money, putting it more into investments. And then think about the money that's coming back into the United States because corporate taxes are going down. Okay, and and two major companies have already made announcements that they're going to make a major investment in America, Apple and Exxon. Think about the earnings per share that's going to increase on the bottom line when the tax expense is going to be much lower. So now when you think about what I just mentioned, and these numbers have not even been baked in my opinion, and in the smart money's opinion, even into the stock market. These numbers are in no way yet baked in, because no one has forecasted 4, 5, or 6% GDP growth. No one yet has forecasted or baked in money coming in from outside America into the United States. A lot of things have yet to be baked in. So the main thrust of this stock market rally is not even yet baked in for what's going to happen in the next few years. And the most important point that these guys made to me that made me think about this was, everyone was talking about in the year 2000. I don't know how many of you remember this, or if you're too young or too old to realize this. We had a stagnant stock market for 10 years in the year 2000. And everyone said, no, this bear market, this stagnation can't last this long. So now on the flip side, everyone's saying the same thing here. You know, I mean, some people think that the bull market began in 2009. The smart money, and even I say, you know what? It depends where you want to have the starting point. They said the starting point is with the new election, that this is a new bull market in uncharted territory. So this is now going to be the difference of opinion here. Some people say that we're late in the bull market, and there's some people who are saying that this is the early stages of a new bull market. Back in December, they said that the Dow Jones was going to be between 26 and 28,000. They were very confident when they spoke to me today and said, that number is not even good anymore. That's outdated. Now they're talking about 27 to 30,000. So that's really all I wanted to say today. So, you know, especially for the investors, especially, you know, people who are investors, not so much the traders, because, you know, you guys don't really hold anything long. You get out, you're not really exposed to the long term because, you know, you guys are on a day-to-day basis. But of course, maybe some of you, you know, have something set on the side as an investment. But this really was geared towards more people who are investors, who have a large money set aside, you know, 5-10 years from now. I mean, I have, you know, that's where I'm at. You know, I'm of course concerned for myself, but I also have 2 little granddaughters. I'm worried about their future. I'm worried about my son's future. And I even had this discussion with them today. So, and you know what's really bad? I wish this would not have happened today. I rather wish this would have happened on a Monday, because I remember when the worst thing to have is to have a bad day in the market on a Friday, because then you have all day Saturday and Sunday to get nervous and sick and worried about this until Monday. So I just wanted to come here tonight just to calm some of your nerves. And I'm just telling you from what I hear from very reliable and smart people, not people who want to, you know, brag and be famous on TV. These are the people that hide behind the scenes, that they ended the day, they were buying stock today already, like around 2-3 o'clock in the afternoon. And I think, and they all said the same thing too, that this is not going to be a long, drawn out event. I mean, obviously they don't know if it's going to be over on Monday, or maybe all of next week might be weak. I don't know. But the point is that this is not going to be one of these long bear markets or a long drawn out correction. I think it's important that the main thing is people feel confident, at least the people that I speak to, they feel confident from an economic point of view that they have the right man in the White House. From an economic, I don't want to go, you know, another silly thing, just for a political point. There was some idiotic remarks I heard today on TV that some of this had to do with the release of the memo. I don't have any idea why that would have affected the stock market. So anyway, that's really it. I just wanted, so I'm open for anybody that wants to ask me anything.
Okay, so JR, so there obviously is going to be some people that might have some questions. I mean, there was a lot of people even in swing trades that, you know, they're maybe not holding long term, but their trades, took a hit today based on what happened in the market. So we kind of touched about the long-term investors, but even their short-term swing traders, were affected as well. I mean, I even got messages from people telling me their account was down 30%, and just told them not to panic sell because obviously looks like a lot of correction was happening, right? So you, on the other hand, had a good day today, though, right?
Yes, today I had a very good day. And that's a good point because that's one thing I forgot to say.
Right. So can you share with us, if it's okay, talk to whatever you're comfortable with regarding your trading day today, because JR had a really good trading day today. So I was really, happy for him. But at the same time, some people on days like today think that it's not a good day to trade. And JR is going to share about his trading day because his trading day was actually extremely successful.
Okay, well, really, it's very simple for me. I have a stock that has not really participated very well in the Donald Trump presidency, HIMX. Today it did very well. Today it's done well for the last couple of days. I have a large core position, but I've also started trading around it. I know someone who is a day trader who just really specializes on one stock. And this person has made $5 million in 5 years trading this one stock. He knows when to get in and to get out, the rinse and repeat. So I said, you know what, let me join in on this because I've been a little frustrated with my portfolio. The thing I want to share about that is the smart money said something very interesting. They said that the stocks that have not participated in this recent rally, they believe those are the stocks that are going to do well once this correction is over, and they're going to be the new leaders. And those leaders, they feel, will be small biotech. The reason they said that was because, if you know, Donald Trump threw in a little bone about trying to get more drugs out on the market, put competition in, get more generic drugs out there, compete against big pharma. And I noticed that the small biotechs that I own today, yeah, they went down, but they didn't go down a lot. The home builders didn't really go down that much today. They've had a 7 or 8 day losing streak in a row. They said those were the stocks to invest in. So, I made a day trade yesterday in HOV. That stock went down under $2. And I said, you know what? It's going down like several days in a row. I sold that stock yesterday, like around 210, 211, something like that. HIMX went up a lot today because they're now in that rinse and repeat cycle where it usually starts to go up 1 to 2 weeks before the earnings. Their earnings are going to come out February 13th. And then after the earnings come out, everyone feels comfortable again, and then the stock's going to surge for the next 2 months, and then it'll go down again. But, it's just going to take that one earnings report for this stock then to finally take off to where I think it's going to go to in this year or next year, which is $20. So I did very well today on that. It was one of the better performing stocks today. And that was really the bulk of my gain today. I own a very large position. I'd rather not share that position out, but trust me, it's very big. It's one of my largest positions. And I've owned this stock for now almost 4 years. And what makes me want to own this stock is the dividend they play. They are a very unique company. What they do is what they take the earnings for the prior year and they pay out almost 90% of what they made in the year and pay that in the following in the summertime. So I get a nice big dividend bonus in July and August for holding this. So it's not like I've just been waiting for years. I get paid for waiting. Okay. So that's really the bulk of my win today. And I'm going to start now investing in, I'm going to be adding, my new strategy is going to be, I'm going to keep my core position in my investments, and now I'm going to make additional accumulating. But those accumulations are going to be more as a trading vehicle. For example, if I own 100,000 shares of a stock, I might buy 10 to 20,000 more of that, but that 10 or 20,000 more will be traded. And I will keep the 100,000 shares for, until that payday comes for me.
Okay,
So
thanks, JR. So you were talking about HIMX, so that's
right.
good. So there's some questions here in the channel. I don't know if you're able to answer them or can try your best if possible. So I'll just ask you the question, and if you're able to answer it, that would be helpful. If you can't or not able to, then that's okay. We'll go on to the next question.
Okay.
So one of the questions we have was, do you think that it was the interest rates that caused what happened today?
Yes, that was the main culprit.
Okay. Another question was, any word on the heavy shorting in the 2-year causing a heightened risk due to higher equity rebalancing?
I don't have an answer for that one.
Okay. Question was, and I don't know if someone was asking if you're able to comment on the I think they're talking about are they talking about a long-term chart, LT chart on TNX 10-year versus the SPX as an indicator for direction of the overall market?
I don't have that chart in front of, I haven't seen that chart. I'd have to look at that and think about that. I can't answer that right now.
Okay, so we can come back to that another day. The other question was, people are interested. There's a lot of people here that are interested in your SIN position. They're also involved in the SIN trade, but I'll go back to that after. I think I want to just keep it focused to this for a minute.
Okay.
A question someone else asked was, do you think the new Fed chairman had anything to do with an encouragement of the pullback?
No, I don't think, no, not at all. I think that people are overreacting to this interest rate thing. It's not, we are not even close. And this is not my opinion. This is the opinion of the people that I spoke to today. That we are not even close to having to worry about this. For example, the unemployment rate is around 4.1%. I spoke to an economist today, who's who's a labor economist. And he said that he thinks that there's still a lot of slack in the unemployment rate, that it could go down even more, 3.9, 3.8, before there's any wage pressured. And so there's still a lot of room for wage increases, and we won't see much of an effect. And, and from a psychological point of view, it reminds me of why people hate Wall Street so much. See, this was finally, they always say, the average man on the street says, you see, whenever there's good news for the average guy, Wall Street doesn't like it and the stocks go down. Because now the average man is going to have, or the average man and woman, they're going to see increases in their wages, because wage increase, we haven't seen wage increase in over a decade. And now that people are going to start to see a rise in their wages, and plus they're going to see increases in their paychecks because of the tax. Everyone's saying, well, see, Wall Street hates that, so that's why I go. It's always the opposite. So again, to emphasize, the interest rates, that's the conventional wisdom right now. Everyone thinks interest rates are going to go up. I've seen interest rates back in the 80s, more in the in the late 80s and early 90s. Interest rates were going up. They were 5%, 6%, and the markets were still going up because because the economy was good and they were able to absorb the interest rates. That is what's going to happen in the next few years. The people are underestimating the strength of this economy. It's an uncharted territory. This is a president that we've never had before. We've had politicians running the country for years, Republican and Democrat. Now we have a businessman. So I'm putting all politics aside here. This is a man who is very smart. He knows his business. He's got the right people doing the right job. So I'm not worried at all about interest rates at all.
Okay, great. And thank you for that very detailed information. So TJ was wanting to know too, is the correction over, or can we expect maybe more downside?
Okay. Well, here's the one thing that these people were all in agreement. No one is that smart to predict when it ends or when it ends. But they did say this. Some of them are saying, I don't think it's going to end on Monday. That's my opinion. I think we might see more weakness in the morning. Maybe we're going to have another bad week, maybe not as brutal as today. But the thing that they emphasized, that they were all in consensus, is that whatever pullbacks there are this year, and by the way, when I had that chat, when I had this talk with you guys in December, I don't remember. I don't have my notes anymore. I don't know if someone could look up and see if I said that they expected a correction in February. They did say that. I don't know if I mentioned the month of February. They said that they might have 2 corrections in this year. I'm not sure if I mentioned February, but my point is they did say they thought February would be the first correction. So
right.
They were right.
And you're actually correct, because Discipline confirmed that you did say that, and that it would happen in February.
Okay, so they were right about that. So I'm going to say they're going to be right about the following statement. They said that whatever corrections we have this year, and they expect 2 of them. So maybe this is the first one. I don't know when the second one is. They think the second one might be maybe in August, September. But the thing that they did say is that they believe it will be brisk and quick, meaning not a long, drawn out thing. And the reason is because people are going to come to their senses. They're going to realize that we have a very good economy that hasn't even begun yet. See, this is the amazing thing that you have to remember, that the new economy, which I think this is a different kind of economy, hasn't even begun yet. Okay, I think this move from 18,000 to 20. I'm sure it has something to do with it, but I think people weren't expecting. I think they just were expecting, a normal recovery, 2, 3, 3% GDP. But now I think 3% is too little. So to answer your question about the correction, I don't know the answer to that, but the one thing I can answer is that it'll be quick and over with. I mean, they would have preferred to have, the 600, they like that it went down 600 points today because they think that already ate up most of the correction. I mean, I don't know what this percentage, I don't know if the percentage was 2%. So, a normal correction is 5%, like a normal average correction. A bigger correction is 10%. A bear market is 20%. So if it's a 5%, that means they just need another day or two like they had today. I mean, maybe some people, it's hard to stomach another 2 days like today. But the bright side is maybe you only have to deal with it for a few days or a week at the most. That's their opinion.
Okay, great. And Discipline note it was 5% this week. So that's pretty much on point with what you said.
Mm-hmm.
So another question was that Japan's interest rate hike was an issue that someone was hearing. Do you have any opinions on this?
Well, okay. As a matter of fact, I do have I did talk with these people, and they made us a comparison about the Japanese market. I don't know how many. Again, this goes way back. I don't know how many of you will remember this, but I remember once the Nikkei was around in the low 30,000. Okay, it was like 31, 32,000. And then it corrected all the way to 8,000. And now I don't know what the Nikkei is, but I know it's pretty high up again. And they made a similar comparison, and they took that and said, what about the United States? Well, they're saying that, you know what, it's funny, they came up that the Dow Jones could maybe go to 33,000 in maybe 2 years. And they said when they came up with that number, they realized that's what the Nikkei was. I know you can't, it's 2 different indexes, 2 different countries, but they said that the United States economy is no contest. Is you can't compare that with Japan. Japan has an older population. They're not as innovative as the United States. So I think that the foreign markets, I think the United States is going to be the leader and the global markets are going to follow suit. I think there's going to be a real global bull market. I think that Japan, that these guys said that they're investing all over the world. Right now, there's no place not to invest in. every part of the world. They like China, Japan, but they mostly like the United States. Everyone is going to start putting their money into the United States. I don't know if I answered the question fully.
That's okay. We appreciate, I mean, that helps shed some light on, to get maybe some more clarity on, what someone was probably wanting to better understand.
Okay.
So another question would be that, what are your thoughts on oil versus the US dollar?
Well, oil is a function of demand and the economy. The economy is going to expand. It's going to be the more demand for output. Oil was another one of back in December, they said the place to put money was in the home builders and oil and energy. And nothing has changed. I think that, I know it goes in different directions sometime between oil and the dollar. But I myself have invested in small oil companies, and I've done very well in those. I have very small oil companies, not the major names, AXAS, Profire, PFIE, and I forgot the other one. But oil and energy stocks is a good investment. They reiterated to me today that nothing has changed in their investment thesis back in December.
That's good, because I remember you talked about that, and you said energy stocks and home builder stocks and oil were all ones to, where the smart money was going into. So that's still in play.
And they haven't really participated either. If you really think about it, the stocks that have not really participated in this rally are the energy stocks and the home builders. They have yet to really, that are on the same level as, the Dow and the NASDAQ. They did. So I'm going to reemphasize. They said they believe the leadership going forward after this little correction, subsides, is to put your money in in home builders, in banks, and energy stocks. And of course, technology. But technology is a given. There's all new things coming out. But those three other ones, that's where you put your money. They haven't participated yet. And I think they'll be the leaders.
Okay. So obviously, Monday we might see a continuation of what we experienced today. So do you have any thoughts on how people, or suggestions, not advice, but maybe what's your thoughts on, people hedging for Monday or for the next few days based on, what's happened with today?
Okay. Well, I can use an example going back to 1987. A lot of people never saw a correction like of 20% in one day. I think that was the 20% correction in the crash of 1987. Unfortunately, I saw some awful things happen to a few people. I actually saw somebody jump out of the window of an office across the street from me. I was sitting at my desk looking out the window, and I saw someone jump out the window. I'll never forget that. Okay. I've seen some people, I've heard of one or two suicides. And the sad thing about all of that, was that if they just would have waited a few days, they wouldn't have had to have done that. I'm sure many people will not do that here. I'm sure you're all smarter and wiser. You have families, and no one's going to do anything dumb like that. So, but of course, it doesn't mean that you're not going to worry. You're going to, so my advice to you is, just don't overreact. That's the main, I mean, it sounds simple, but it's the best thing to do. Don't overreact. Maybe wait a few days. I mean, especially investors. This is more for investors than traders. I mean, traders can make money in a bear market. That's I was going to have a talk later on, either in late February. Mm-hmm. So I'm going to just give you a little preview of one big difference. Day traders, there are advantages and disadvantages, but here's one example of the difference. See, I think it's more painful for an investor to go through something like today than a day trader. Okay, because some of you guys don't hold things overnight. I know. Hello?
No, go ahead. Whoever.
Okay.
Yeah.
No, I'm just saying that I know some of you have swing trades, but mostly for the investors, I wouldn't go in 9:30 in the morning and start buying, or sell. I would just sit tight and let it ride out. That's my advice for investors. Don't be scared. I mean, I learned my lesson. I'm trying to give you some of my experience so that you don't make the same mistake as me. I didn't do anything crazy in the crash of 87, but I did, believe it or not, I lost 15 pounds in 2 weeks from these two crashes together. So, my nerves were rattled. I was afraid. I was worried. I didn't do anything crazy, but the thing is, the one thing I've noticed about me is that I've gone through, I have a diary of my Wall Street career. I write down some, things that not any ordinary day, but big important days. And I always look back. And the one thing that I can say, and I'm proud to say, is that I've written out every bad correction, and I've always gone 3 steps forward, 1 step back. That's the way my career has always been in investing. I've always recovered my losses. I've made about, I looked in my journal this evening. I looked at the number of trades that I've made in my lifetime. I've made about, and this doesn't, I don't know if this sounds a lot or not, but in 25 years, I've made about 900 trades. When I mean trades, I buy a stock and then I get out. That's one. So I've made about 900 trades in around 25 years.
You're talking about personal trades.
Right, personal trades, yes. Right. And of those 900, I've been successful on 750 of them. Okay. And if I would have, and and this was an important statistic for me that I learned. If I would have panicked on any of these horrible days, and if I would have sold because I was afraid or scared, that number of 750 would have been dramatically reduced down to 300. So what I'm saying is that if I would have used my emotions, I would have been successful maybe only 300 out of 900. So that would have been a 33% success, versus if I just stuck it in there and stuck with my convictions. And I constantly reminded myself, why did I invest in this stock in the first place? That's what I always do. Why did I invest? Then the rate went up to 750 out of my 900 trades.
Yeah, that's great. So Super Bloom, are you here? Because I think Super Bloom wanted to comment here. I don't know where he is. Oh, there you are.
Yes. Okay.
Yes.
Can you hear me? Okay.
Yes.
Great. Thank you, JR. I wanted to two comments. My comment first one is about the core position strategy. Okay.
Mm-hmm.
We have known that this is the SPY and the market is upward trending the last few years. Okay. In an upward trending market, this is the strategy. Hold the core position, which you are,
Mm-hmm.
right? On
Right.
a ticker that we like, on a sector that we like. The hedge fund managers are thinking the same. They're allocating their resources to the sector they think will be growing. They have a core position in it, right? Where they will increase their exposure to it. And that's meaning in increasing investment, cash, capital into that sector or that company, correct? The core. So here's what I'm going to point out here. So we could trade around that core position just like you did, HMIX. Okay? Trade around that core position. But here's the trick. Do not limit yourself when you trade around that core position. Because if HMIX does not give you the opportunity to trade around it, do not force that trade. Okay? So what I'm saying is there might be another ticker in that same sector that you like that will give you that opportunity for you to trade around. So you don't have to limit yourself to the exact ticker, right? Because whether you made 100K on HMIX that day or 100K in another ticker in that same sector, it's still money in the bank. Okay? So don't limit yourself just to that one ticker. It's an emotional attachment to that ticker because you have a core position to it and there's some volatility there. But don't limit yourself. You have to step back and say, wow, I have a core position HMIX. I'm going to trade around HMIX. But if HMIX is just taking a dip for the past few weeks, I could trade something else in the same sector. That might help the people in the audience and maybe even yourself. Like, don't limit yourself to that one ticker, especially in the same sector. Okay. And so I looked at the SPY chart today on the daily. Okay. The SPY, the drop today had a lot of selling pressure. A lot of volume came in to trade this. Okay. A lot of short selling, panic selling, institutional, I think maybe institutional dumping. If you pull up the SPY chart on the daily, there was a ton of volume on this move. Okay. So I'm thinking, and it crossed the 20-day moving average. Okay. So on this chart, the next support level is the 50-day moving average, which is, I think it's around the 260, 255 area, if I can remember correctly. So if this downturn continues next week, the 50-day moving average will be the absolute support. If that crosses, we will see a big panic in the market. The market will no longer have the thesis that we're growing. It is no longer a pullback. This is now a reversal. Okay, so if we pull up the 50-day moving average, the SPY, the 50-day moving average on this chart is incredible. It has not crossed this line for the past year or two, if I remember correctly from this afternoon. So just a technical perspective on it. Okay, so next week we'll see more weakness. It will consolidate and congest and consolidate and find a base. But if it crosses, so if something fundamental happens in the economy, Donald Trump says something, or war with North Korea, who knows? It will, if it crosses the 50-day moving average here, there will be panic. Huge. Okay? So
okay. Very good point.
Okay?
That's good to know.
That's my opinion there.
Okay, good. Anything else to add? Super Bloom? No?
No.
Discipline.
TJ?
is just, I don't know if TJ is able to talk, but Discipline, any questions on your end or comments that you'd like to add?
Just want to say, JR, it's always a pleasure to have you and always a treat to have your knowledge shared with the group. You clearly have the experience, and Bloom's always teaching technicals, and we have a lot of leaders in this room. So to have your perspective align with things we're sharing and things that we see really strengthens and makes our vision as a team that much more cohesive. So always thank you for joining, having these thoughts shared.
Well, thank you very much for that. And I will say this. I think I've said it a few times now. I'm going to say it again. There are some very good traders that I listen to. I have a very high regard for you. You guys are very, very sharp and smart. I mean, if I look back at my career, you know, I think the biggest mistake I ever made was I don't mean not investing, but if I would have been more and incorporate a trading strategy, that would have helped me a lot. I mean, I am a successful investor, but there's a price to pay. See, again, I'm going a little bit into what I want to say, maybe in a few weeks from now, but there's a heavy price to pay for an investor. And sometimes there's a heavy price to pay for a trader. I don't want to give everything away today. I like to make a little tease here, but I will say I'm learning a lot from you guys as well. You know the old saying, you could teach an old dog new tricks. Well, you can. I mean, with me. I mean, I have made a few trades so far this year. I would say that I don't know, I think I've made around 10 or 12. And of the 10 or 12, I've been successful maybe 8 or 9 times. And I feel good about that. It helps me because, sometimes one disadvantage of being an investor completely is you have to, it's like watching paint dry, to get to that end point, to that end game. Like, for instance, the best example, again, is HIMX. I mean, yeah, I bought this stock at $2. It's gone in a roller coaster as high as 15. I should have gotten out. I didn't. But in the meantime, then it went back down to 5. Then it goes to 10. It goes back and forth. But the only good thing I could say is at least I'm getting a nice dividend. But it would have helped my nerves and my health if I wouldn't have to deal with this all the time. But I'm saying that there are some very good traders that I have a lot of respect for you guys. I mean, I don't know how old some of you guys are. I think you're very young. I mean, I could tell by your voices that, many of you are young, maybe in your 20s, 30s, or 40s. But
I'm in my 30s, so I mean,
okay,
you know that.
Right. So I think that you guys are doing a smart thing. I mean, I still encourage investing, but I think you guys are on the right track. I think you're very talented people here, very talented. I'm telling you, some of you guys put my trading desk where I used to work to shame. I mean that. And of course, I know you don't get that kind of money that they made, but if I brought you guys into that trading desk, you'd give them a lot of you'd give them a run for your money. So I also want to thank all of you for doing this service. I mean, like I said, Wall Street is very, very sneaky, very competitive. There are a lot of sharks out there, and nobody really helps anybody. I mean, I've seen day traders at trading desks. They make sure they don't share their ideas. Everybody wants to be the head trader of the group to get the better bonus, to be on the list of, the boss's pet. There's no cooperation, no team effort. And I saw that for over 25 years. So when I come to this group and I listen to you, how you all work together, it's amazing. So I commend all of you.
Well, thank you. I just have, if you don't mind, just two more questions. If
No
that's
problem.
okay. Thank you. So, one question we had with Cam Jam was, he was wanting to know if there's a criteria that you use to hold long term. So, do you look at company filings like an 8K, a 10Q, or do you speak with the company directly to determine that you're going to go into something really long term? Because, like you mentioned, HIMX you've had for 4 years. So, how do you determine these decisions?
It's a long checklist before I make. Okay, when I just buy a couple of thousand shares, I don't go through it's not worth it for me to go through a laundry list. But when I'm ready to make a big investment, then I go through an important checklist. So the first thing I do is, and I think I mentioned this before, I subscribe to Investors Business Daily.
Yes.
Okay. And I look at their top 50. It's called the IBD 50. Those are the big cap stocks. And then I look at another one called the IBD list under $10. So I start with those two lists. That's my starting point. The next starting point is I look for a certain technical pattern. William O'Neill, the famous guy who wrote the book and who was involved in Investors Business Daily.
Yeah, he's our Canceling guy that we love.
Right. The number one chart, or the number one pattern he likes more than any other, is the cup with handle. I look for that. And I subscribe. I pay a premium for services. I have the charting done for me. I don't have the time to really analyze a chart. I want someone to do it for me. Investors Business Daily does it. And they show you the cup with handle. They show you the pivot point. So that's a major checklist. Then I start going into the more boring parts. I'll look at a 10Q. I'll look at a 10K. I'll look at the PE ratio. I'll look at what industry they're in. And IBD has the economy broken down into 197 industries. They say that if the stock is in the top 20 or 40, but preferably 20, then that's where you should. So I look if a stock is in that top 20 industries. That's another one. And believe it or not, the other one is a little bit unusual. I look to see if there is anyone following the stock, if there's low exposure, no one's following it, and it's not on anyone's radar. That is a sign to me that that's where I want to be in. Because if everyone knows about it, everyone talks about it, then it's already probably priced in.
Right. So you like to look for uncrowded trades where no one's really
exactly.
in it.
Yes.
So I have one more question and then I have a fun one for you.
Okay.
So any comments, and I don't know if you can comment, but any comments about cryptocurrency? Any thoughts on that?
None. Other than
that was quick, guys.
Oh wait, but hasn't that? I mean, someone maybe can tell me. Has there been a problem with this lately? Did it go down a lot? Because remember, the one thing that was mentioned at this seminar or this conference that I went to, none of them, then again, we're talking about men who are in their 50s and 60s who've been in the industry for 30 years. that are old schooled and they don't like anything new that they don't understand. I'm kind of in the same ballpark. I don't really understand how this works, and I think I'm a little too old to begin to learn.
Never too old. We're always a student of the market. So we're always learning, so never think that. So can you tell us any sectors that you're bearish on?
Let me think about that for a minute.
Okay. And while you think about that, can you tell us how diversified you are? TJ was curious to know.
I own no more. I own no more than 12 stocks at a given time. I may not own 12, but the most I ever own is 12, and I own no more than 3 stocks in a particular industry. Right now, I have 2 biotech. I like biotech, and I have 2 stocks. But as a matter of fact, the question about SYN that we never answered, but I have slots for one more biotech that I'm looking to buy. But so right now I have 2 biotech stocks. I have 1 home builder, HOV, and I own HIMX. I own the 3 oil stocks. And that's about it. I own, I think, 7 or 8 stocks right now. But SYN, just let me say something about SYN. I'm sure some people own that.
Many in this, coincidentally, many people actually are in that trade. Also because the price point is reasonable for people that are doing a small swing trade if they're starting out, or some of them are heavy in it. So of course you've talked about SYN before. Right. So if you have the time, if you want to comment, or we can always do a follow-up on the positions that you have.
Okay. Well, with SYN, I'm right now underwater in that one. I bought that. I have an average cost of 54 cents. Okay. And I bought it as low as in the 40s to as high up in the 60s, but mostly weighted into the upper 40s and lower 50s. So I'm losing money right now on this stock. But the thing that I like about this one, as well as the other one, CYF, is that they both have fast track designation labeled on that. What's very significant about that is what Donald Trump said on the State of the Union. Medications, drugs are very expensive in the United States, cheaper in other parts of the world. He wants to put the United States on the same level playing field. And he realizes for that to happen, more drugs have to come to market. And I don't think he cares, he doesn't care about lobbyists. He doesn't care about what these big pharma companies that want to protect their drugs. He is really on the side of small biotech. Okay. And I think this is a big step in the right direction for a company like SYN. I think something is going to happen in the first quarter of this year. I know and then when you go to Stock Twitch and you hear the scare tactics, they have the money, or they're going to have to use the ATM. I mean, that's a lot of BS in my opinion. I mean, I look at who's an example of smart money? Michael Dell. Okay. I mean, I've been involved in something like this when I worked, where, someone that's going to put money into a company, there's a fine line between what's insider information I'm sure that, and I don't want to say anything negative here. I'm not saying that anyone knows anything, but I'm just saying I don't think someone as smart as Michael Dell is going to go in blindly here. Okay. I think that the results are very good. And by the way, the reason why this stock went down a lot is because there was a scare that some people died in the recent trials, but those people were sick to begin with. They had heart problems. And then, there's scare tactics that it was the drug that caused it, which was baloney. So, look, obviously there are no guarantees, but I don't think the CDC and the FDA are going to put their reputation on the line. I mean, I don't know what the statistics are, but when you get fast track approval, I think most of those are positive and they go and they follow through with it. I'm sure there have been some companies that have gotten fast track approval label and then it never panned out. But I'm very optimistic still. And I think this is a good price to get it in on the 40s. And I noticed one important thing on the day that stock went down to 42, 43 cents. The volume, when it was very low, it was only a couple of 100,000 shares when it hit 42, 43, and 44. And then the volume, it wound up being over 1 million shares that day, but it was bought at more at 46 and 47 cents. So in my opinion, it was a buying opportunity. I don't need to buy any more. I have more than enough of this, and I just don't want to add any more.
Okay, that's fair. That's very fair. And I love Sin. I have a position there too, and I'm very happy with it. And smart money's in it too. So I just think it's just unfortunately a matter of time. And when we want it to move, it's not moving. And like anything else, you just got to sit and nest it, and hopefully the wait will pay for itself. Okay, and just one last question, and then I have my fun one. And correct me if I'm wrong. Discipline. What the question was about the telecom sector. Is that a bearish sector?
Okay. Yes. Getting back to this, I don't have any. The only thing that I'm not interested in and doesn't excite me is metals and the utilities. So what I'm really saying is that I think the entire economy is going to trickle down to many, many industries. Someone said today, I don't know if it was on CNBC or Fox Business, I'm not sure, but they say now the easy money is over. And now it's going to be more stock selection. I disagree with that. The people I spoke to disagree with that. The economy, like I said, is in uncharted territory, which means there are going to be things happening that you probably will never see, that you haven't seen ever yet. So I like any industry that is innovative. Look, for example, I'll give you an example. Going back to one of my favorite stocks, HIMX, believe it or not, is going in the car business. Someone pointed out in StockTwits, I didn't see this article, and I don't even know how they got this information. It was news to me, but it was very positive, that HIMAX is going to have a chip that is going to be put into the Tesla cars.
Oh, and people love Tesla.
Yeah. So you see, I'm saying is that there's a lot of innovation here. I think people are not giving this economy the respect that it deserves. So to answer your question, I think every sector is on the table to make good gains. every sector except the boring ones. Gold. I mean, gold and silver. I don't know. I mean, utilities, not exciting to me. I think, maybe you can't throw the dart, on a dartboard and wherever it lands, and that's the investment. I mean, I'm not going to go that far and say that's going to be that easy. I just think that if you do, reasonable due diligence, you're going to be fine.
Well, that's good. Gives us some reassurance. And then one more. I keep saying one more. You're going to kill me soon, but
Oh, it's okay.
It's okay. JR knows me, guys, so don't worry. I'm not taking advantage of him today. But can you tell us just about how the market makers hold the stocks down from running? And do you think that that's happening with SYN?
Wait a minute. Say that first part again.
If you can talk about so it's kind of a two-part question. So can you talk about how the market makers hold stocks down from running? And do you think that they're doing that with SYN in particular?
Okay. Well, I know the answer to this question.
We would hope so.
I worked for a market maker.
That's right.
Okay. And the most used tactic that market makers use is to put up that phony bid and ask of a large size. And you know what? It works, because when I was investing, when I worked at my company, and I was there maybe a few weeks, I wanted to make an investment, and I saw that there was a large bid of 500,000 shares of a stock. And I said, wow, that means they really want that. So you know what? Let me buy it. Let me just go for the ask. And sure enough, I bought it. I bought a couple of thousand shares. Within seconds, that bid was gone, and it never really existed. And I didn't know this, but the market maker was my company. My company. I didn't realize. See, I was new there. I didn't know what stocks yet they were market makers in. And obviously it was a violation. I can't buy a stock. I mean, I didn't get penalized, but I was not allowed. You cannot buy a stock. I could not buy a stock that they were a market maker in. I didn't know that at the time. I was only there a couple of weeks. But the point is that market makers do that for the same reason, because they know it has an effect on people that don't know any better, like someone like me at that time. So
they take advantage of people.
That is it sounds simple, but it is the number one tactic more than any other. Wow. And the way you kind of know, but you know how you figure that out?
Okay, tell us the secret.
You just have to see with the normal trading, with the 100 shares, 200 shares, you see if that changes or not, if there's an impact on the size. That's the way you can normally tell if it's real or not. So be wary. I mean, now it's actually even harder because of the electronic exchanges. It's harder to tell. But back then, when electronics were not part of the game, it was a lot easier to know their game. So I mean, there's around 5 or 6 tactics, but that's the number one, and it works all the time. And as a matter of fact, when I used to attend the strategy meetings once a week, they always talked about it. Said, okay, guys, remember, let's put those big bids and ask up when it's needed.
Let's scare the public.
Right, exactly.
Let's scare.
And by the way, it's all legal.
Traders.
And by the way, it's all legal, because you could just say, I changed my mind.
for sure. For sure. So do you think that the market maker, like obviously from your own experience, right? Would the market maker try to tank the stock so that they could, take out, accumulate and take out all the shorts?
They do that too. Yes. That's, yes. I mean, to make a long story, yes.
Okay. They're so sneaky, those market makers. And what are your thoughts on the solar companies, especially after Trump's import tax?
I don't really have, let's put it this way. I know someone who works in a solar company. He's been there for several years. He's a salesman and he's very disillusioned. Most people don't want, I mean, it's almost like he made the analogy, who's going to want to, like electric cars? People like regular cars. And the same thing with energy. I don't think the solar energy thing is going to really be as popular as some people make it out to be. I asked that once, some intelligent people, and no one ever seems to care about it.
Well, that's good. Maybe it's not that important.
Mm-hmm.
So I think Discipline, was there a part 2 to the market maker question? Or we're okay with that? Discipline, if you can comment or speak. You can speak. I guess you can't speak right now. So
Here, I'll make a comment.
Okay.
who's talking? I heard someone speaking, but I can't hear them now, so I don't know where they. Oh, that was Super Bloom. Oh, you were talking. I didn't recognize your voice. I'm sorry.
Okay, so the market maker, there's actually two kinds of market makers here. The one is now almost obsolete, and the other one is considered the major banks, right? So, and correct me if I'm wrong, this is just from studying the psychology of the market maker and reading through articles and books. Mm-hmm. Okay, so the market maker can hold, there's two kinds of the market makers. One is the one that's taking the risk and providing the liquidity into the market. These guys have all the inventories of the stock. So you were the market maker for Berkshire Hathaway. You had the Berkshire Hathaway inventory. Was that correct?
Yes.
Correct. So the other type of market maker is, like, we're talking about institutional money, like Goldman Sachs,
right.
JP Morgan, Morgan Stanley, Deutsche Bank, UBS. These guys are going into the market and they don't hold the inventory. They're actually trying to make the money for their client.
Right.
So they are saying, Goldman Sachs will go into the market, will put in a heavy sell order, let's say 10 million shares on the ask, correct? To hold the price down. You can't break through resistance here. And they're actually buying on the other end at support. They're actually buying. They're accumulating the shares here. So that's one way of them holding the price down.
Yes.
Okay. So and another way from the other market maker, which is maybe the guy that's on the New York Stock Exchange, we call him the exchange specialist, who's able to manipulate the bid and ask. Right? They're making the money on the spread. So the Goldman Sachs guy is making money for their client, right?
Yes.
Customer, for their institution. The other market maker is making money for themselves or their group of market makers. Remember in the 1990s, early 1990s, when the market makers were actually charged for market manipulation?
Yes. Yes.
Right. That was because they were manipulating the spreads on multiple exchanges, and they were colluding with each other for personal gain.
I remember that.
Was my understanding. So a lot of people get confused. The word market maker, there's actually two types, and there's multiple ways and the point is this: they have heavy money, big clients, and they can see everything we do. Even the market orders that we put through, the market maker in the New York Stock Exchange can hold the price down, move your market order, and line you up, putting you like third place, fourth place, fifth place, so you don't get a fill before somebody else does. Right? There's all these tactics that they use.
Yes, I agree.
I don't know. The market order stacking, right? Because if everyone
Back then.
All right, perfect. Thank you for answering the question.
Okay, so JR, we're just going to close it off shortly because, we've taken up a lot longer than this is what, we could talk to you for hours, to be honest. So,
Okay.
we could go to midnight, but we don't want to be burning the midnight oil. So, the fun question we have to close off tonight's session, and for those of you listening, we will have another fireside chat with JR later this month. We're just going to coordinate a date. So we'll have another opportunity to speak with him. But the question we have is a fun question, and maybe you even want to talk about your little pool. But we wanted to know who you're taking on Sunday, the Eagles or the Patriots for the Super Bowl.
Well, I don't know how many polls. I mean, I'm in the poll where it's not who wins, it's the score. The boxes where the numbers go on one side and the other on another side, down the x-axis or the y-axis. So
I don't know anything about that, but
yeah, so it's not. I'm not going to win based on who wins. I'm going to win based on the final score, and I have good numbers. I have a 3 and a 0, so those are common numbers in football. So I'm hoping that the score is Eagles. Well, I can win if the Eagles have 3 and the Patriots have 10.
So do you not have a team in mind? Let's say, so we know your figures, your numbers are ex-CFO. So that's cute.
Mm-hmm.
But can you tell us, like, if you were to pick a team, who you're thinking is going to win? Any predictions?
I don't remember. Maybe you can refresh my memory. They have a Super Bowl indicator. Isn't if the National League wins, isn't that then then it's a bull market? Can someone confirm that for me? They have this indicator.
Oh, they do?
Yeah, there's an indicator, that if the national, I don't know if it's the national team or the American conference, that whoever wins, that means it's a bull market.
Oh, well, Marcos is saying 8-0, or is that 8.0 or 8-0? Marcos? Don't know.
Well, anyway, to answer your question, I'm rooting for the Eagles.
Okay. Well, there you go. So Marcos was saying no numbers in the boxes is 0 and 8. Oh, his numbers are 0 and 8.
Oh, okay.
Okay, that's good.
I mean, I'm also rooting for the Eagles because I'm also a partial Pennsylvanian. I mean, the other place in Pennsylvania, so I'm a little biased towards Pennsylvania. So the Eagles, yeah.
Well, all I care about, honestly, Super Bowl, I couldn't even care less about the game. I'm just interested in seeing Justin Timberlake perform.
Oh.
Always the halftime shows what appeals to me. So, that should be fun.
Mm-hmm.
But of course, I'll still watch the game anyways, because it's nice to be part of the excitement.
Mm-hmm.
And that's where everyone's going to be doing on Sunday night.
Okay.
So we appreciate that you've spoken with us tonight.
Yeah.
And you've really given us a lot more information than we were expecting tonight. So we really appreciate it. Yeah. You have a lot of people in this group that really are fans of yours, and you're probably going to see a lot more followers on Stock Twits because people that probably never knew you were even on Stock Twits are going to follow you. So you might get you'll probably have more followers. Yeah. But we appreciate you. We look forward to doing it again later this month. Okay. And you have a fabulous night.
Okay, thank you.
That couldn't hear the whole session, it's recorded. And JC's done a great job. And thank you, Oak, for taking notes and for discipline taking notes. The video will be uploaded onto YouTube probably in the next 24 hours or less.
And we wish everyone a fabulous night, especially a Friday night. You guys are so dedicated to be here. And thank you, JR, for doing this. Really appreciate it, especially because you knew that so many of us were, wondering what's happening. My positions, my board is all red. And you were gracious enough to offer to speak to people tonight to help them, calm down and kind of give a little bit of an overview. It's coming next week. And this could be a continuation on Monday, but, not to be, panicky.
Right.
And just take it, it's a part of the correction process. So really, really, really appreciate it.
Right. So I just want to leave with just one before I go for all of you people out there. Don't worry. As a matter of fact, be optimistic. Okay. Be optimistic. I mean, I think there is good times ahead. I think we're going to see a several good years of a bull market. We'll have a few bumps in the road, but really don't panic, don't worry, don't lose any sleep this weekend, don't get sick. Just go in there Monday realizing that, okay, it might continue, but, it'll be short-lived.
That's good. And just so you know, we have we have 3,500 members in this channel now. Mm-hmm. So that's a lot of people here in this group. So you're talking to
it was a pleasure.
Audience has grown a lot. So thank you so much.
No problem. It's been a pleasure. I appreciate the interest and people, listening to me. Thank you very much, everybody.
No problem. Have a good night, everyone. And we'll touch base on Monday. Have a great evening. Thank you.
Okay.
Thank you so much, JR. Really appreciate your insight.
No problem. Thank you. Thank all of you. Thank you very much.